So as you guys know, we are currently in the middle of Q3 earnings season, and one of my biggest holdings, my second largest in Tesla stock, just had a horrible showing with falling profits, increased competition, and several other rising concerns. All things that are really punishing the stock right now, sending it lower and causing a lot of people to panic over it. So the aim for today's video is going to be to make sense of all of this. I'm going to be giving you my opinion, my view on all of it, coming from a longtime Tesla bull. And I'm going to let you know how concerned I am about these results, where I see Tesla heading here in the near term and longer term too, and what I plan to do with the stock myself as a shareholder, given all the negatives, all the things that are going wrong. So I hope you guys enjoy this update video on Tesla stock. Hit that like button if you do, but let's just go ahead and dive straight into it. All right, now, the way I want to tackle this subject is I'm going to start off very negative on Tesla. I want to run through the earnings and extract all the negatives from it, all the concerns I have, and let you know why I actually think that the stock could still potentially go lower. But then right after that, I'll transition over to the positives about Tesla stock, and I'll let you know what I plan to do myself as a shareholder. But again, fair warning, we're going to start off very negative on Tesla. So grab your popcorn and let's dive into it. All right, so let's start with those earnings. And right off the bat, we can see that it was a pretty bad showing compared to estimates, with EPS missing by nearly 10%, while sales also fell short by over 3%. Year over year, it was still close to a double-digit rise in sales. However, a big portion of that was helped by huge growth in energy and services, which I'll come back to in just a minute. But automotive sales only rose by 5%, gross profit sunk by 22%, and net income fell by around 40%. And if you're wondering why profits fell when total sales actually rose, well, the answer is pretty simple. Given the high interest rate environment that we're in and given the rise in competition, well, Tesla management clearly figured that it would be better for them to just lower prices on their vehicles in order to maintain market share and not lose ground to their competitors, because that would be even worse than just temporarily having weaker margins. Which, as you can see on this chart here from Axios, the average price per Tesla vehicle in America has now fallen by nearly 25% over the past year, so they're much cheaper now. And as a result, Tesla's gross profit margin has in turn fallen in each of the past 5 quarters in a row, which is definitely not a great sign. Now, it should be noted that this doesn't just have to do with price cuts alone, though, as Tesla also noted in the earnings report that they've invested heavier into upgrading their factories, which also resulted in factory downtimes, and even their newer factories like the ones in Texas and Germany still need some time to ramp up and improve efficiencies. They also pointed to more research and development spend, especially in artificial intelligence, which I'll also come back to in just a minute, but they're quoted in saying that during a high interest rate environment, we believe focusing on investments in research and development and capital expenditures for future growth while maintaining positive free cash flow is the right approach. Year to date, our free cash flow reached $2.3 billion, while our cash and investments position continues to grow. And of course, part of those capital expenditures have also been tied to the building of their new Cybertruck, which Elon happened to also give some concerning comments on that spooked investors, saying, quote, "It is going to require immense work to reach volume production and be cash flow positive at a price that people can afford. I just want to temper expectations for the Cybertruck. It is a great product, but financially, it will take a year to 18 months before it is a significant positive cash flow contributor." And yeah, that part right there saying that they need it to be at a price that people can afford, that's what all of this really comes down to. Musk is trying to keep prices attractive during a weak economy, and he elaborated on this during the earnings call, saying that he's worried about the high interest rate environment that we're in right now, and that if they remain elevated or go even higher, talking about interest rates, then it's going to be a lot harder for people to buy their cars, adding, quote, "I just can't emphasize enough how important cost is. We have to make our products more affordable so people can buy them." Now, he did later apologize towards the end of the call for sounding so paranoid, saying that he might just be rocked right now by the ongoing war and conflict around the world, namely the situations between Russia and Ukraine and Israel and Palestine. things that have really been on everyone's minds these days. But the comments and the overall report were still negative enough to send the stock diving by over 15% this past week. Now, I will note, however, that one thing that I think a lot of bears and the media especially love to leave out is that even after this drop, Tesla's stock is still up over 70% just this year alone. And from 2019, it's also up around 1,700%, 1,700% in just 4 years' time. So yeah, it was already up a gigantic amount to begin with, and even down now, falling now, it is still up a huge amount. It's still one of the best performing stocks in the market. So it's not like a bad performing stock. It's one of the best. Now, having said that, from the very tip top, it should be noted that Tesla stock is technically down still about half its value. It had climbed so high, now it's lower than that, so it's down about half its value from the very tip top. But even here, the valuation is still pretty damn expensive, trading at a PEG ratio that is 65% higher than the sector median. And mind you, the PEG ratio is probably the most forgiving metric that we can use on Tesla, since it uses future growth estimates of the next 5 years. So for it to still be that much higher is pretty alarming, considering the rise in competition too. Speaking of which, according to Canalys Research, if you include hybrids, the Chinese automaker BYD would actually have more market share than Tesla at around 21% versus Tesla at just 15%. Now, obviously, that's not a fair comparison since Tesla only sells higher priced battery electric vehicles, but over time, that competition is still growing and could pose a bigger threat to Tesla, especially in China, which is the most crucial market of all, as it now controls over half of the entire global EV market. And by the way, that global market grew by nearly 50% in the first half of this year, yet they still make up just 16% of the total automotive market. So, for Tesla to be putting up smaller growth despite the broader market being on fire and growing this rapidly, I think it's just another example of how it's becoming harder for Tesla to compete. Case in point, Tesla even started to advertise for the first time ever in order to attract more customers this year. Now, despite that, I am still not ready to call this a demand problem for Tesla or anything even close to that. I still think that Tesla is an extremely popular brand. I still think that they will continue to sell just about as many vehicles as they can even create, especially the newer models like the Cybertruck and ones that are still to come. And that's why they've had to expand their factories, even though it is temporarily hurting their margins. But the point of all this is that there are reasons to still be concerned given the new challenges, the horrible macro environment, and the still high and expensive stock price of Tesla even after the recent dip. But there are also some positives to be optimistic for in Tesla's future too. So let me just quickly give you the bull case now, and then I'll finish up with my overall conclusion and what I'm doing myself as a shareholder. All right, well, if we're going to be making the case for positives right now, I think we have to start right away with a basic foundational argument that all of these things that we've discussed that Tesla is doing here that are hurting their margins are all necessary moves. They're all the correct moves for Tesla to be making, and they will later pay off for them in the future. For example, Tesla mentioned the heavy investments into expanding and upgrading their factories. Well, that expansion is going to be crucial for Tesla's ambitious delivery goals. As of now, Tesla already has 6 massive factories across California, Nevada, New York, Texas, China, and Germany. There's another one planned in Mexico too. And during last year's annual meeting, Musk stated that they will probably build 10 to 12 gigafactories in the coming years. Well, those new factories are what's going to give Tesla the capacity they need in order to reach their gigantic goal of delivering 20 million vehicles by 2030. And I want you guys to keep an eye on that 2030 year. Keep that in mind because it's going to come up several times here in just a second. But just that 20 million vehicles by 2030 metric alone is one of the most important metrics when it comes to Tesla stock because it's often referenced to for why the stock will increase in the future. For example, famous investor Ron Barron has a price target of $1,500 by that exact year, and it uses that metric heavily. And don't worry, I'll do the math for you. At $1,500, Tesla stock would be more than 7 times higher the current share price. So it's a big price target there from one of the most famous investors in Ron Barron. And you know what else is supposed to happen by 2030? Well, the gigantic growth catalyst of robo-taxis, which according to UBS analysts is a market that could be worth a massive $2 trillion by that year. To give you some context, Tesla only did 81 billion in total sales all of last year. So just this one market alone would be worth 25 times that amount. Now, granted, Tesla is obviously not going to be the only player there, but I think they have a great shot of at least being one of the biggest leaders. For example, robotaxis are almost certainly going to be battery electric autonomous vehicles. And guys, that's Tesla's specialty. That's a market that they still command by far the most market share of in the entire world, and over half the American market easily as well. And along with the robotaxi, Tesla is also aiming to release a cheaper $25,000 car for the mass market too. Now trust me, I get that lower prices means weaker margins, but Tesla is clearly thinking more about their future market share while they continue to upgrade their factories, improve efficiencies, increase their capacity and drive down costs, which is what they've been doing every quarter, as you can see on this chart here, really driving down those costs. And even with the recent dip, Tesla is still growing sales at a much higher rate than the auto industry, while also commanding much higher margins as well. Tesla, by the way, is that red line, auto industry is the gray line there. And again, this performance here, it's at one of their weakest moments, which in all honesty isn't really even as weak as people say. I mean, if you look at trailing 12-month deliveries, Tesla continues to grow every quarter pretty consistently. And by the way, the other cost that was putting pressure on their margins was their heavier investments into R&D, artificial intelligence, and autonomous driving. But those are all areas that will also be super crucial to Tesla leading the robotaxi market. And this quarter, they more than doubled their compute capacity by commissioning one of the world's largest supercomputers. And as you can see on this chart here, their full self-driving beta miles have grown by a staggering amount, from around 100 million miles up to over 500 million just this year alone. You've seen that huge growth there happening just now. So that growth is actually going to get much bigger here going forward. And as their fleet grows, it's going to keep collecting more data and it's going to keep giving them more advantages over the competition. Now, of course, they also mentioned heavier investments into the Tesla Bot 2, and the jury is still kind of out on how successful that venture will be. That one's, I think, a very long-term kind of growth driver potential. But one area that is for sure going to be crucial in society much sooner, I would say, than human-like robots is going to be energy and storage, which Tesla grew their energy storage deployments by a whopping 90% this quarter. And like I showed you earlier, energy and services are growing at a much faster rate than automotive sales, which over time, I do believe that it'll help their business diversify more and even stabilize a bit, rather than being this, volatile or even kind of cyclical type of business that is very common among automakers. In the end, I just think that the more affordable vehicles that can get into more people's hands, that's going to be a key growth driver for Tesla over time. And then AI services, autonomous driving, robo-taxis, and even energy is where they're going to be able to extract bigger profits from those vehicles, over time and help them stabilize. The problem is that many of these things, though, are going to take time, and the market may not be patient enough to wait for that. And I think right now a clear example of that is how everyone seems to be criticizing Tesla and Elon Musk for saying that the Cybertruck is not going to be profitable within the first year. And I'm just sitting here thinking, like, do you have any idea how drastically different the Cybertruck will be to all the competition? The materials that it's being made out of, the fact that it's supposed to have better performance at a cheaper price, how Tesla literally built like a brand new factory out in Texas just to build the thing. And you want that truck to come out and be super profitable right out the gate? It's just not realistic. It's going to take some time. And I think the more important thing to be focusing on is just getting the Cybertruck into as many people's hands as possible and then generate service revenue from it over time. And then the truck itself can be profitable over time too. But the bigger profit driver should be those software-like margins. And that's why I continue to hold the stock myself into the long term. Those are the things that I'm looking forward to. But if you ask me to analyze the stock based on a short to medium term kind of time frame, Well, yeah, I can't say a lot of positives about Tesla right now. If 2023 is such a challenging year and is, hurting their margins so much, what is 2024 going to be like? I don't see some huge catalyst on the horizon that is going to help them. In fact, everyone and their mom seems to be predicting a recession will be hitting very soon. And in that scenario, I'd have to imagine that Tesla just continues to struggle. So I predict in the short term a lot more volatility, and there could very well be more downward pressure. Now, if we happen to have a soft landing in the economy and inflation and interest rates start to come down, we avoid a recession, then yeah, Tesla stock could potentially rise more, and especially longer term once you start, putting out the Cybertruck and you have the Robotaxi and you have hype for a cheaper car. All those things can drive the stock up a lot more over time. But right now, here in the short term, I just see more continued volatility and I see more headwinds rather than tailwinds. So, I'm a little pessimistic in the short term, but as a shareholder, I'm still going to continue to hold. Now, you have to remember, though, that does come from the viewpoint of someone who already owns a large position in Tesla, and I'm up a lot on that position because I bought so heavily, many years ago. So I'm up a lot on it. It's easier for me to hold it. But, if you're asking me, am I buying, am I selling? Well, I'm not selling the stock, but I'm definitely not buying any more shares either. This is really just a hold for me. And, I don't know, if I didn't already own the stock, even then I'd probably still want to see some clarity on the economy and on some of these headwinds for Tesla kind of dissipating before, I call this like a must buy on the dip. I don't think it's that. I think it's more of just kind of a wait and see and a hold, really. But hey, that's just my opinion. That's the best I can give you. I'm sorry. I wish I could give you more. But I hope that you enjoyed the video nonetheless. I'm just being honest with you. These are my opinions. I'd love to hear your thoughts. Leave them down below for me and we can have a discussion. But thank you for all the support, my friends. It really means a lot to me. I hope you're all doing well. Now we'll catch you in the next video. Take care, everybody. Bye-bye.